Welcome to the latest edition of The Bull, the Bear, and You as we navigate what is happening in the economy and we take a look at investing. I'm Stacy Smith, and I urge you to say that you like or subscribe to this podcast on whatever platform you happen to be using. A lot of focus recently on investing in AI and in big tech companies, but there are also some caution signs. We'll talk about that and the impact of AI on jobs. It's coming up in this edition of The Bull, the Bear, and You. And with me to talk about the economy and investing is my panel of financial advisors and experts, and they are Kerry Coghill of Coghill Investment Strategies. Next, we find Frank Rossetti. Frank has his own alternative investment company, which is called HF Management Company. Also sitting at the table is Kim Forrest of Boca Capital Partners. And one more spot at the table is occupied by Michael Godwin, the Chief Investment Officer for Fergasso Financial Advisors. Thanks for joining me once again for The Bull, the Bear, and You. The markets continued their upward climb with the three major indices once again setting new all-time closing highs in the past 2 weeks. A couple of things also happened in the last 2 weeks, and in the end, they may or could have an effect on the economy. Those things are AI, employment, and lingering inflation. Employment and inflation, of course, as you've all have told me many times, are the mandates of the Fed. And what it decides about interest rates affects mortgage rates and housing, which have an effect on the overall economy, which, of course, could have an effect on your portfolio. Also, is there any impact on businesses because of the government shutdown? If my summation is correct, then it is the basis of our discussion today, and if it is not correct, we'll find something else to talk about. So, before we get to that, Kim, a brief look, if you can, on earnings reports. Are companies optimistic right now, and have there been any surprises in any particular sectors or anything so far?
Sure. Well, I'm going to tell you, I'm just going to, usually I like to build to the headline, but I'm going to flip it. I'm going to tell you the headline. AI demand is still there. Demand for the components of AI. I think that was not a surprise, but it was a delight. And the market has taken off last week because of it. Now, I don't think you should get too entirely happy because there's a lot of people that are coming around to the way I view it, which is maybe this huge AI that needs all of these resources isn't the way to go. There was a wonderful article in this week's Wall Street Journal, again with the Wall Street Journal, I know, but where it talks about small AI versus large AI. So there's that. But getting back to your original question, so far, earnings season has been really well in hand. There are some issues with particular companies where they have just gotten beaten up. Chipotle, I'm talking to you, and even Meta. Meta disappointed, largely because of what they're spending on AI. But so far, things are really hanging in there. And it's a tough time for people like us because we're not getting the government data that tells us what's happening in the economy. So what we're doing instead is using these results and, more importantly, what the companies are saying about the future to tell us about the economy. And it looks like steady Eddie, a little bit of growth going on there, nothing terrible so far.
Okay, anybody else want to jump in about earnings reports right now?
I remember when Apple, and this wasn't that long ago, Apple crossed the $1 trillion mark for market cap. And I was like, that's unbelievable. There's no way they'll hit $2 trillion anytime in the near future. And last week, the week before, Nvidia just crossed $5 trillion in market cap, which is absolutely astounding in my mind. And there are some reports out today, an analyst thinks that Nvidia can hit 8.5 trillion on this AI golden wave. I mean, it's at some point this is going to, I don't know if it's going to end badly, but we've been talking about the bubble and all that kind of stuff for a while. But you also have to think that once you get to the size that they're at, it is going to be harder and harder to just double in value and double in value. The law of large numbers eventually kicks in. So I'm somewhat longer term, maybe going to hopefully become a little bit more optimistic on some of these smaller companies, not displacing these larger, the NVIDIAs of the world, but at least from a market performance standpoint, having a catch up in value, because it's been such the big just continue to get bigger. We've been in that world for more than a decade now, And at some point, those do kind of reverse course, and you find your way back to the mean.
It's
The
yeah,
whole market's capitalization is what, about 60 or 70 trillion dollars, which means, according to the Wilshire 5000 anyway, which in theory is the whole thing. I don't know how factual that is, but it's close. Which means Nvidia is now, what would that make it? That would make it about 6-7% of the whole thing. They're an equipment supplier. I mean, they don't even sell to people. I mean, it's very difficult for me to wrap my head around these numbers. Even if I relate it to history, like General Motors, at least they were selling products to people. So it's very difficult for me to get my head around all this stuff. And somebody smarter than I, Kim, Michael, Carrie, you got to help me with it.
yeah. I mean, it's really been interesting to continue to see how companies are reacting to their earnings and what's being said in these earnings, because the biggest concern that we have, and this kind of bridges to that AI conversation, is that where's the reality of the value creation with AI? So I think that a lot of what we're seeing is, I mean, there are elements of this that are very similar to the tech bubble back in 1999, where what investors neglected to do was to really look under the hood and play out the scenarios of why these market valuations were going up so high. And there are many things, if you're evaluating AI, and evaluating the impact of it, you have to look at the investment that's being made, like take any of the tech companies, for example, and ask, how is this going to create value? Because it really is going to need to create value internally. A lot of the AI right now is kind of free, and once people have to start paying for it, that's where the rubber meets the road. So, when we're evaluating companies and their earnings and really looking at the impact of AI, because it's huge, it is literally huge. You really have to look at several things. And what we're looking for are really, what are the key metrics that companies are using? Do they actually have their act together around the investment that they're making into AI and what that value creation is? Is their use of AI aligned with their strategic goals? What kind of governance do they have around it? What kind of security do they have around it? What kind of data are they using to understand that the data is accurate? There are so many factors as to which companies will ultimately be winners versus losers.
All right, you raise a really good point there, but who is to make that determination as to whether they have the right security and whether they have all of the things you just listed?
Yeah, I mean, it's the board. It's these corporate boards have governance, right? And if governance is doing their job, what they're doing is they're evaluating the risks. There's also these companies at the board level have risk management committees, and they're looking at they should be looking at all of these factors.
All right, then that just leads us right into the other thing I was going to ask anyway, and you really kind of touched on it, Carrie, and that is that how big tech is approaching AI, and that is, that some companies are spending a ton of money, as you're talking about right now, to make a hefty return down the road. Others are reporting how they're making money right now. So, as an investor, is there a better approach to this?
Well, let's try to put it in a model that most people can understand. I don't think they really understand what AI is. So AI is models that needs tons and tons of data. And I don't care if you're doing a large language model, and that's the open AI things that you say, hey, computer, find me this information. Or what do you think about that? Or have a conversation with a computer. That's a large language model. And then there are other smaller models that are very targeted and actually are the places where companies are getting productivity enhancements where it looks at a process and says, here's a way to do better, or I can help you figure out when something's going to go wrong from this data, okay? So what is the analogy here if it's not mathematical modeling, which I'm sure is not everybody's like core strength or interest, sadly. Let's talk about the gold rush. This is the gold rush where the people who are selling and winning right now in big ways are the people who are building out the data centers needed to build these thinking machines, right? So that's NVIDIA, and to a lesser extent, the other chip manufacturers, and then there's companies that are funding this. So those are the suppliers of the gold rush. And then there's the gold rush. And what we're kind of saying at the gold rush is, well, we don't really have use cases for the large language model, but they're smart and we're going to figure it out. So they are literally gambling that they are going to make a product that people are willing to pay money for. Yes, some people are paying $20 a month now to have more computing access than free, but there is no compelling thing out there that I know of, and I'm looking for it, that says OpenAI is our winner here and in the future, right? So these are the cautionary tales that you have to think about is, do you want to put all your money into somehow owning a piece of a large language model, or do you want to just for right now, while things are hot and it's being built out, do you want to buy the suppliers? I think gold rush, think of the gold rush and where your company that you're interested in fits into the scenario.
I was speaking with a friend of mine who has for 40 years now been accumulating data that he has manipulated with programs that he wrote to further his business venture. And I asked him how AI has impacted me so tremendously. And he said, I am now running this business using AI for 90% of my calculations. And it's much better than what I did on programs. And he says, it works where I put in a question, and I don't know if that's the right word for it, and AI takes that question and all this data that I've amassed for 40 years, and it starts learning. And it starts learning what the solutions are that I want. And it comes up with the answers that are better than what I did with my programming for 40 years. And he said, my business is in trouble because eventually other people will have the data I have. But right now, that's my competitive advantage. But eventually that will go away because it's not like the data is not available. It just needs to be accumulated. I've been doing it for 40 years. I have it, but it will fade away. And these types of things are going to change the way a lot of businesses operate in the future. And from a corporate board point of view, as Carrie mentioned, this is going to cause costs to go down because once these AI models start learning what your data gives it in the business, the people who have been manipulating that for you to come up with business solutions for your business are going to not be needed anymore. And the AI is going to do it for them. It's going to be very fascinating. And fortunately for the world, we are in a declining population mode, at least for now. And should that continue, we won't have the people that this is going to do the work for in the future. And fortunately, it will be there to do the work because there won't be people. As
We'll
many.
get into the employment. I want to get into employment and everything in just a moment or two, but I understand what you're saying. Given, Kim, kind of what you said, I don't know whether Carrie and Michael can talk about this or not, but it sounds like really AI might be divided into a consumer, if I can call it that, product, and then also a business or corporation or industrial kind of utilization.
Yeah, that's a good analogy. Right now, what I think OpenAI does, and I'm just going to toss this out because I've talked about this a lot before, is it's a much better Google. It's a much better search engine, right? You don't have to know how to ask the question in weird words that you just have to put in the right order. And then you don't have to go and see where the answer is in somebody else's website. The computer just tells you. Super, wonderful. But for what Frank was talking about, that's my idea of small AI, that you have all of this data And I don't know what industry, we'll talk offline. I'd love to hear this, Frank, but they have a very targeted problem that they're solving with this data. This isn't just asking a computer. This is using probably computing paradigms that this guy could never do himself before. And that's awesome. But that would be a business-oriented kind of small AI. So there you go. I'm done.
Yeah, and I would pick up on that, that's really for us what we're looking for. Because I do think that valuations with some of these kind of direct, fancy name type companies out there, they're very stretched. We just need one little crack and we're going to see valuations come down. It's just getting to a point where when you start to run out kind of the potential value creation, how many years until we actually get there doesn't really give a lot of opportunity. But these businesses, you can take a business as boring as the insurance business, and I say that lovingly because my husband works for an insurance company, that if they can improve their outcomes by by using AI, whether it's a life insurance company that is running mortality, or whether it's a health insurance company that's managing risk, there's the potential for tremendous improvement across the board. And that's really where, as an investor, looking at companies and understanding what the strategic alignment is to their investment in AI, what their infrastructure is, as Kim had mentioned, what's the use case? Do they really understand how they're going to use it? What KPIs, what measurements are they using to understand this? And my hope would be that for publicly traded companies, that these corporate boards are taking this very seriously. As Frank was saying, that, we will see these models take over, people. You won't need as many people, but I think that the good news on the flip side of it is that we probably still don't even know what jobs are going to be created because of AI. It will lead to a whole nother industry.
And then just to throw mud in the water, there's this thing out there that's the next big thing called quantum computing, which someone tried to explain it to me, and I understood. I could define every word they said, and when they put it in a sentence, I could not understand what they said. It's impossible for me to understand what they mean. They said quantum computing is like having you in two different places at the same time. I don't get it. I'm lost. Kim, this is your world.
Quantum computing uses bigger numbers, we'll put it that way, than just zeros and ones. Right now, everything that happens on your computer is either a 0 or a 1. That's the easiest way I can say, is that all the numbers, the infinite amount of numbers, oh, this is good, number theory, that's between 0 and 1, because there is an infinite amount of numbers there, can be used then in computing, and you can get different answers. How about that, Frank? Now you understand what quantum computing is. It's not zeros and ones, it's many.
Every word you said.
Pardon?
I can define every word you said. I don't get
Exactly. And it will, I think it will open it up, but there's much debate about the kind of small cap scammy, may I say, companies that are out that they're saying they're doing quantum now. I'm not going to, it's too long for this format, but it's very, very far in the future. Because the short answer is, when a computer gives you an answer, you want it to be the answer, not an answer. And right now, quantum computing gives you an answer, and you can have no way to figure out if it's the answer, right? So you don't know if it's correct or not. Kind of takes the whole thing away of computing. So
Michael,
that's my really short answer about beware quantum computing.
Michael, you understand all of this about computing and AI and quantum and all that, right?
Yeah, I don't want to bore everybody with all my knowledge of quantum computing. So if you happy to skip to the next topic if you want, Stacy.
Okay, well, we will. Frank kind of brought this up, and so did Carrie and Kim, and that is that right now, tens of thousands of white collar jobs are being reduced, eliminated by corporations nationwide, many of them because of AI. And most of the time, investors, of course, like the idea of cost cutting because it can mean a bigger bottom line for the profit margins. But at what point do we begin to see unemployment rates go up and then fewer consumer dollars fueling the economy? Anybody want to take that one?
I don't
Well,
know. You can look anecdotally, and it is interesting to see Target's laying off people, Microsoft, UPS, Amazon. We see all the headline news there. And that can be sometimes self-fulfilling or self-reinforcing in everything, as we all know here, is a cog in the wheel. And so you can have a self-fulfilling prophecy or a self-fulfilling cycle there where more layoffs exacerbate more layoffs and more layoffs. But um, so we do, I know everybody on this call pays a lot of attention to the unemployment rate and what the Fed's going to be doing there as well. But Kerry brought up a good point too. You're undoubtedly going to see a number of job displacements because of AI, without a doubt. Whether it's white collar, whether it's even cashiers, drivers at some point will be sort of displaced to an extent. Anybody, as Frank mentioned, in sort of middle office or back office will likely be impacted, maybe not displaced, but impacted. But Carrie, I mean, you never really think about all the jobs that will be created because of AI. I mean, it's going to happen. Everybody thought, you know, jobs would be pretty much eliminated because of the internet, probably. But at some point, we're going to have a ton of new jobs that are going to be created because of AI. So it's going to be very, very interesting to see how that really plays out over time. So yeah, a lot of jobs are going to be affected negatively, certainly at the beginning or the onset. But again, we do think a lot of jobs will be created, obviously coming out of AI. And Frank really brought up a good point. I never really thought too much about it in terms of the demographics across the world. In terms of working age populations are really declining globally. Um, that used to be a huge, huge concern for the growth for economies year over year in trying to sustain growth. And maybe that won't be as big of a deal in the decades to come. I haven't really thought too much into that before.
You all brought up this point. So we have the layoffs going on, and we're all sitting here saying, well, we don't know what the jobs are going to be created down the road because of AI. So you have that interim period, though, where people are out of work, they're being replaced by AI, and how are they being trained for a new kind of employment when nobody knows what that employment is? I mean, in other words, you got people sitting here who had white-collar jobs, making a good living, living in nice neighborhoods, everything, nice cars, and swimming pool clubs, whatever it might be, and then they can't afford that anymore.
Well, Stacy, we can't tell you because we have no data. The government shut down.
Okay.
But, I mean, you bring up a good point, and it really is an issue. I mean, I don't know, maybe this is a bridge to the next topic, but this is why government data is very important, to be able to track these trends and see what impact they may be having. To Frank's point, and I really want to reemphasize what Michael reemphasized, which is the fact of a declining population, plus because of the slowdown in immigration, that kind of also, kind of creates opportunity for people that might be being laid off because of AI. So I think it's something that's really important to track and to see how quickly we see other jobs get created out of this new industry. I think that kind of the biggest concern that I have, kind of taking this all the way back to the beginning of this conversation, is that it feels so similar, right? It's starting to feel very similar to the internet bubble where, and only with a handful of companies, right? That everyone gets so overly exuberant about a sector that valuations climb. And what I'll tell you about times like this, they will continue to climb until everyone has FOMO. So not until everyone's like, no, this has to be for real. Let's invest. That's what happened during the internet bubble. And we saw very solid, great companies, really get hit hard. And it took years for those companies to get back to where they were. So you just want to proceed with caution. There's definitely opportunity, but you have to pay attention to valuations. I think we'd be foolish not to.
Yeah, it took a couple of years, if I'm not mistaken, for the
Yes.
market to rebound after the
Yep.
the internet bubble. I think it was like in, 2003 or 4. Of course, we also had 9/11 happen during
Yeah.
all of that, and so
Yes.
there were other.
Yeah, that kind of threw a wrench into it, but
Yeah.
back then, people would say, when's this gonna end? I said, well, I can't answer that question, but I used to say, and I'm starting to say it again, the higher it goes, the worse it'll be when it ends.
Yeah.
And Carrie always says, these are opportunities for investors to look at their portfolios and rebalance, because they're undoubtedly getting overweighted in these stocks that are running inexplicably to levels that are not understandable. And they may be right, and I'm not saying sell them, but pare them back, get them back to where they are in the proper relationship to your overall portfolio, because something very good is not performing as well as it should. Add to that position maybe.
Okay.
And look at your own risk threshold, because you've also gotten a couple of years older while this was going on.
You brought this up, Carrie, and that is, of course, the government shutdown, and then for purposes of people who look at data supplied by the government, they're not getting it right now. That didn't stop the Fed, though. It met and it cut interest rates this past week by 0.25%. However, the Fed chair did indicate that another rate cut in December, like a lot of people are expecting, is not a foregone conclusion. So from an investor's standpoint, do you want to see another rate cut right now, given how well the economy is doing?
I mean, I'm a data dependent person like the Fed, right? So, me, I'm the one that's always on here saying I think it's crazy when people forecast like we're going to have 7 rate cuts next year. So I do worry. I don't want the Fed to cut rates unless there's a reason to cut rates, because it just creates a problem. And it is very difficult to say right now whether or not we should have another rate cut in December. There's so much going on in the economy that we're just not able to assess. And it creates a lot of uncertainty, which goes back to Frank's point. Like, now's a great time to be rebalancing because we just don't know. And for our clients, it's better safe than sorry. There are factors in the economy that I think are really going to start to hit. We have health insurance. You're hearing about all this health insurance subsidies, which is part of the battle in Congress right now. And we're seeing health insurance premiums skyrocket, and that's going to affect everyone. So, you look at that as being a slowing piece to the economy. You look at, how deep are some of these layoffs that we're seeing. Plus, then you have these federal workers that are not getting paid. So, I think it makes for a very sticky or a very choppy situation potentially over the next couple of months. Once the government shutdown is resolved and we start to get data again, we'll have kind of a clearer vision as to where, maybe the Fed should be leaning.
Anybody else?
I'm going to say, why do we care about the Fed at this point? Because we know that they're going to have to continue to cut rates at some point. I mean, they're even saying they know it's restrictive. And today's big announcement was that Kimberly-Clark is buying Kenvue, okay? And it's a $48 billion purchase. And here's the thing. Even if they do it with some stock, I'm not quite clear on the deal, they're going to have to pay cash. And this company is betting that its revolving debt, which is usually what is paid used to pay for acquisitions is going to be at least where it is, if not lower next year. So I think that if companies are getting out there and spending, billions of dollars and buying each other, the rate is going down. So knowing on any specific day when the rate goes down as an investor, I don't think it gets you anything. And again, the Fed keeps saying that, it knows that rates are somewhat restrictive. I'm more concerned about us really understanding where inflation comes from, and I strongly believe that it is money supply. And I keep looking at money supply going up, and indeed, my grocery bill is not going down. There are many reasons why groceries aren't going down, but I'm thinking the classic too many dollars chasing too few goods might be one of the answers. So we have to figure out why money supply keeps rising, what is driving it, and maybe do a two-pronged approach, yes, with looking at interest rates and whether they're causing inflation, but I think money supply is an answer. And I feel like I'm out on an ice floe by myself because I don't hear anybody else like carping about money, M2 going up continually.
Kim, maybe you should put your hat in the ring to be the next Fed chair.
Dear God in heaven, no.
No? You don't want to sit in front of Congress and opine about this stuff, huh?
No, I don't want to do that. That's terrible.
Let me add as the resident curmudgeon here. Interest rates are not high where they are. Historically, forget the last 10 years. Historically, they're about average, if not low. And inflation, forget the last 10 years, is not high here. 3% is not a high inflation rate. And so the need to cut interest rates because of inflation, to me, is based on a short time horizon of 10 years, and we're trying to get back where we were when we had 0 and 2 and so there's ridiculously low numbers inflation rate. They're not realistic, I don't believe. I've said this before and I will continue to say it. These are average numbers or below average numbers. And that being said, we're seeing what happens with population shrinking. 70% of the economy is consumption. We have fewer people consuming. That is not a recipe for growth.
All right, Michael, can you wrap it up for us?
See, I think inflation is a little bit elevated. I mean, the Fed has a mandate of 2%. That's your mandate. It needs to be around 2%. Also, you have 65 million people who are no longer working, and they're relying on their retirement portfolios, or they're relying on Social Security, which is tied to inflation. That's already a problem, from a running out of money standpoint. So I get Frank's point that historically speaking, it's not elevated, but at the same time, you have a mandate of 2%. Try to get it to 2% because that's kind of what you've based your policy rates on.
All right, great. We are now out of time. We'll continue to look at investing and the economy in our future editions. And also, since you're watching or listening to this podcast, I ask that you hit the like or the subscribe button on whatever platform you happen to be using. So right now, thanks for joining us. We'll see you again for the next edition of The Bull, the Bear, and You.